Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, March 31st, 2023. And our top story today, 401k fees are on the decline, but there's still more work to do. And joining me now to discuss this and a lot more, Chris Tobey is the Chief Investment Officer for the Racial Impact Justice Fund. Well, Chris, it's great to see you. Thanks so much for joining us on the program this morning.
Oh, great. Great to be here.
All right, Chris, there's a lot of that you work on that I want to unpack. And I thought in this first segment, let's talk about 401k fees. You have been an advocate, as many people have been, for lower fees. How are we doing in the realm of reducing fees for participants for their 401k plans?
I think we're doing a great job. I think there's been, all the numbers are showing that fees are going down. A lot of plans are doing a good job. And again, it's different by different sizes of the market. I mean, the plans above 3 billion have all been moved a lot. As we get from maybe 1 billion to 3 billion, there's still a lot of movement. When we get under a billion, a little less. And as we go down under, especially under 500 million, under 200 million, some of those plans have not moved nearly as much toward lower fees, but then again, they don't have the scale either in that area either. So that's kind of what I'm seeing overall.
And Chris, when it comes to some of the litigation, we've talked with other guests about litigation, including attorneys. Has the amount of litigation from your perspective increased? Are you seeing more litigation and litigation around fees?
Again, some of this I do, I do a lot of consulting. I do consulting on these cases as well. And I have seen a bigger increase in the area, but under $1 billion, again, is an area that I've looked at a lot because there are just more cases out there. The thing is that, and again, I've actually helped find attorneys to find cases. And what we're finding in the large area is most of the plans have done a good job and have gotten their fees down very low. So it's we're talking less than maybe 5% of these really big plans that litigation, I think, is warranted. We saw a lot of this, a recent spurt of this litigation against BlackRock funds, which I thought was really, really stupid because those are such low fee index funds. And the courts have correctly knock those out, have not taken those forward. Now, I don't agree with all the court decisions. Sometimes I think that we should be allowed more discovery in some of these cases. There's more that they're dismissed before, without everything being known. But then again, what we're talking about is there's so many, even though it's growing, you can still there are so many plans out there. I don't know if it's 600,000 plans out there, that if we even go to 1,000 a year, that's still the very the 5%, 10% worst plans out there, with 50% of the plans doing a really, it depends on the size. I think you've got probably almost 90% of the large plans doing a very good job now. It's very hard for me to find cases with the large plans anymore. They're almost forcing some of them now. But as we get smaller, under $1 billion to 500 million, I can still find, but that's still, I'm looking in the top 20%. 80% of the cases are still, 80% of the plans are still have lowered their fees enough that they're doing a fairly good job. As we get smaller, under 200 million, it's a higher percentage. But then at that point, the attorneys aren't as interested because, again, they make all their money as a percentage. So even if you have, relatively high fees in a smaller plan, they don't make as much money, so they're not as interested. So it's been I think litigation is there are still thousands of plans out there to litigate. I estimate about 5,000, but that's still a very, very small percentage of the plans out there.
Yeah, so it sounds like for the most part, fiduciaries seem to be understanding their responsibility and taking that seriously and doing the correct steps. Anything before we go to a commercial break, anything that you would add? I know we're going to talk about pensions and private equity in the second segment, and you sit on the board of a public pension. Anything that you would add from a fiduciary perspective when it comes to the 401k plan that you think fiduciaries might want to continue to think about? Is it changing over to a CIT if you have mutual funds? Look for other ways to reduce administrative expenses?
It's in general, it's to do I think the best process is to do an RFP process, a competitive bidding process. And that's part of the public pension. That's one of my things is as you get away from RFPs. What I've found in a lot of the litigation is that sometimes the people at the plan want to do the right thing, but they're overruled by a C-suite executive who has a buddy who's a broker or somebody making it off there. They want to do the right thing, but they're told not to. And so I'm finding that to be sometimes there are internal conflicts of interest in these companies that are driving this. In many cases, and the people who are actually running the plan want to do the right thing and cannot.
Yeah. Well, Chris, as I said, I need to take a very quick break. When we come back, we're going to talk about private equity and public pensions. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're joined this morning by Chris Tobey of the Racial Impact Justice Fund. Chris, thanks so much for staying with us this morning.
And no, great to be here. I love your news column, and I look at it every morning.
Yeah, well, we appreciate getting your insight, and you wear multiple hats. I want to turn our attention from the 401k to the public pension plan, and I want to get your perspective just overall. I know you're living in the great Commonwealth of Kentucky. You sit on a retirement committee there, and you do many other things. But how are we doing from a public pension perspective when you look at plans around not just Kentucky but around the country?
Well, I'm not currently serving. I served on the Kentucky Retirement Systems. I was a trustee from 2008 to 2012. I've written books, but I've done consulting for, just recently did something for the Chicago Police Pension Plan, worked on the Maryland plan, So I've been doing a lot of consulting. The Kentucky plan was one of the worst funded pensions in U.S. history. We were like at 11-12% funding levels. And then the Chicago Police, another one I worked on, is around a 20% funding level. So again, there are a lot of pensions are doing okay on the funding side. Again, maybe half of them are doing pretty well. Another quarter are kind of could do doing better, funded maybe between 50 and 70%. Then you got your bottom quarter who are funded under 50%. And that's a lot of the state of Illinois plans, our state of Kentucky plans, Connecticut, a few ones around the country that from the funding side are a problem. I look at the investment side of the public pensions in my consulting work. And again, this is something I looked at I mentioned in our 401k fiduciaries. It is the abandonment of RFPs, requests for proposals, and competitive bidding in the public pensions for the last 10 years that has led, I think, to excessive fees, especially in private equity and hedge funds.
So let's talk about alternatives, because from looking at depending on where you grab statistics from, the allocations to alternatives is going up in these pension plans. How have the returns been relative to what you pay? Because there's different fee structures. I guess just for the benefit of the audience, you don't just pay 30 basis points for a private equity fund or a hedge fund, right, Chris? Yep. You're paying a lot more than that, but there's also greater risk and there's illiquidity that you have to factor in. But what's the risk return here? Has it been good overall? I'm sorry, I didn't mean to interrupt you. Go ahead.
Problem is, I don't know. Private equity firms in general make up their own prices, make up their own valuations, make up their own performance. They're in secret no bid contracts. I tend to believe some of the numbers, and this is stuff. I don't know, Richard Ennis, former consultant and founder of Ennis Knupp, has come out. I really believe his numbers that private equity really after fees has actually underperformed the market for most public pension plans. And the fees are 10 times what they're paying in other funds.
So this has a potential negative impact, and it's not, we're painting with a broad brush. That's not the case always in every plan, but overall, it seems like there may be a deleterious effect to the portfolio. The RFP process, the review and evaluation of different products, to me, as a former reformed investment consultant, seems like the appropriate path that fiduciaries, or at least those that follow fiduciary best practices, should be taking when it comes to these asset classes as well.
And again, that's one thing I believe, but we have not, in the last 10 years, they've been abandoned for private equity funds and hedge funds because of lobbying, I believe, by the private equity and hedge fund industry. When I was doing research on my book, Kentucky Fried Pensions, I found that Blackstone had 20 executive branch lobbyists registered just in the state of Kentucky. So these big private equity firms are lobbying a lot. I think a lot of this has happened since Citizens United has allowed like unlimited dark money political donations from private equity and hedge funds into local politicians in the state and local level. So I think there's a lot of that going on. Again, we used to say that DB was better than DC in the public world because they had lower fees. That's no longer the case. I think even in the public world, DC's plans are lower fee than DB because DB plans in public have tended to load up on private equity and hedge funds. So their fees are actually higher now.
So to correct this issue, is it more transparency that is needed, meaning, return data, the securities that are bought? I know the SEC has I think tried to tackle some of this, but what is needed to, in your mind, clean this up so that a member of a public pension understands where his or her investments are being directed?
Well, the first step is requiring competitive bidding, RFP process, where there is in the RFP process, it has transparency on who's managing it, looking at the contracts, looking at the fees. right now, everything's done in a secret no bid contract. And I, as a trustee, wasn't even allowed to look at the contract. That's how secret these contracts are. Currently in Chicago, I'm working with the group. They have an open records request to look at the contracts in the private equity, but the plan is they're fighting to not release these public contracts to the public. And there's another open records case in Ohio with the Ohio Teachers Plan, in which there's an open records case that's going to the Ohio Supreme Court now, that they're calling private equity firms claim they're trade secrets in these contracts. Of course, I've seen the contracts, and they're no trade secrets. There's just a lot of ways that they can hide expenses and fees, is my opinion, and also break state fiduciary laws by not being a fiduciary in the contracts. That's the reason they want to keep them secret, in my opinion.
Well, sounds like there's a lot of work to be done. Chris, really appreciate you joining the program, sharing a little bit of your insight, and we look forward to having you back again. We'll continue the conversation, my friend.
Excellent. Glad to be with you.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to? Drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRN Weekly. We'll be taking a look back at some of our best segments for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.